Welcome to Dr. Fred Markets. This is not financial advice. Every day, the world of finance, crypto, and artificial intelligence moves fast, really fast, and staying informed is the only way to stay ahead. That's exactly what we do here, together. Let's get into today's video.
Bitcoin is quietly shorting the entire S&P on your behalf, and you're still dollar-cost averaging the thing it's betting against. Verdict: U.S. stocks are now a leveraged boomer coin, and Bitcoin is the only asset priced for their screw-up. Signal 1. The Fed just got a new chair confirmed, and Trump's people are already screaming, no rate cuts. Translation: the political cost of saving your stock portfolio just went up. High rates are now a loyalty test, not an economic tool. That's poison for the S&P at 748, up 0.79% today, floating near all-time highs like nothing changed. Stocks are partying like it's free money season, while the bartender is changing shifts and locking up the bar. Signal 2. Inside that S&P, your golden idol Nvidia rips another 4.39% to 235.74. One stock, 4% in a day. That's not broad economic optimism. That's a single point of failure being treated like a bond with rocket fuel. You're not holding a diversified index anymore. You're renting exposure to one overloved chip dealer. At the exact moment, the cost of leverage stays high by design. Rate cuts stall, the multiple on this story stock fantasy stops expanding, and the index suddenly remembers gravity. Signal 3. Zoom out from the Fed circus and look at the actual world they supposedly manage. A Chinese secret police outpost in New York. A soldier's body pulled from a training exercise in Morocco. A doctor with hantavirus in a special isolation unit. The headlines scream fragile system, yet your stock portfolio prices in infinite smooth sailing. Meanwhile, Bitcoin quietly sits outside that system with no earnings calls, no rate sensitivity, no CEO to subpoena, trading 24/7 like a live referendum on trust in institutions. Every geopolitical and biorisk headline is a free ad for an asset that exists precisely because people stopped trusting referees. Here's the cliff. Wall Street still values US stocks like the referee is neutral and immortal, while Bitcoin's entire value is that the ref no longer matters. Now the connection. Those three signals say the same thing from different angles. 1. The Fed is being pulled into open politics. No more technocrat cosplay. If rate cuts have to wait for optics, your S&P exposure is now a campaign prop, not a math problem. That means more public pressure to hold rates higher, longer. High discount rates punish assets whose future cash flows are mostly vibes and hype. Looking at you, index stuffed with mega cap tech priced like eternal growth. 2. The S&P at these levels is no longer the market. It's a structured product. Long Nvidia, long US policy staying boring, long global peace, long biosecurity, long nothing ever goes wrong. You're not diversified. You're concentrated in America never trips. The 0.79% bump today is not safety, it's complacency.
Does what you just heard make you want to learn more, to dig deeper, to ask better questions? That curiosity is exactly what separates people who understand finance from those who don't. Most people stop at the surface. You're going further. Let's continue.
3. Bitcoin is the opposite bet. Long human screw-ups, long policy error, long they lose control of the narrative. That doesn't mean the world explodes. It just means the referee keeps looking biased or incompetent, and capital slowly leaks toward systems that don't require belief in a single committee. Every awkward Fed headline, every foreign influence scandal, every crisis mishandled pushes a little more weight into an asset that doesn't care who chairs what. Here's the one mechanism you're not taught. US stocks are duration on competence. Bitcoin is duration on distrust. When the Fed is seen as neutral, S&P wins. When the Fed is seen as political, Bitcoin stops trading like internet magic money and starts trading like default hedge against career politicians touching the rate dial. So what does this mean for you? First, stop pretending your S&P index is neutral. It's now a leveraged bet on US institutional credibility staying intact and boring. If you think the Fed, Congress, elections, and foreign influence stories will calm down, fine. Own it as a high-conviction political trade, not a sleep-well blanket. Second, stop treating Bitcoin as a lotto ticket. Treat it as a hedge against Fed politicization and institutional drift. Look at allocation through one brutal question. How much of my net worth depends on adults in suits never panicking or pandering again? Size your Bitcoin exposure as insurance against that fantasy. Not a meme, not a cult, a specific hedge against one specific failure mode. Third, build a barbell. On one side, productive assets in US stocks you understand, not just blind S&P worship. On the other, a deliberate written down Bitcoin allocation sized to where you sleep at night if the referee loses the room. No middle mush, no half conviction sludge. This is not financial advice, but here's the truth. Right now you're fully exposed to competence risk and naked on distrust risk. Fix that imbalance before the headlines do it for you at worse prices. 3-point summary. 1. The new Fed politics mess means S&P is now a political derivative, not a neutral index. 2. Nvidia-led gains show the index is a concentrated, high-duration bet on perfection priced like a savings account. 3. Bitcoin is the only major asset explicitly priced around institutional distrust. Use it as targeted hedge, not a scratch-off ticket. If this slapped you awake, you know what to do. Subscribe, show up tomorrow, and stop outsourcing your brain to the index committee. The referee just became a player. You need a position that survives when nobody trusts the scoreboard. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.